Hello and welcome to Z Commodity Capsule. Gold prices continue to hold above $4,100 an ounce mark on Wednesday, but the yellow metal has kind of ebbed off its sharp two-day rebound, because of which it garnered nearly $150 an ounce in the span of just 2 to 3 trading sessions. Now, the appetite in the riskier assets is supported by optimism over an end to the longest ever US government shutdown in the coming days. Also weighing on yellow metal is the doubt over Federal Reserve's plans to cut interest rate as the dollar found some footing in today's Asian trades. Now, markets were watching the Supreme Court scrutinizing of US President Donald Trump's trade tariff, although a ruling appears unlikely in the near term. End of the government shutdown will open the door for more official economic data releases, which would in turn help quell some uncertainty over the economy, which again is negative for gold, which thrives on the safe haven demand. London copper was also listless near $10,800 a ton on Wednesday after US private sector labor data added to the expectations of a Federal Reserve rate cut, while markets look to progress towards the ending of the prolonged US government shutdown. Now, payroll processor ADP said on Tuesday that firms in the United States shed more than 11,000 jobs in the week through late October. Having said so, amidst all of this, Citi continues to see copper climbing to an average of $12,000 a ton by the second quarter of 2026, and they have also given a bull case scenario of $14,000 a metric ton. They continue to see a strength in copper prices. All oil prices meanwhile were little changed on Wednesday, with Brent crude prices holding near $65 a barrel after having risen in the previous trading session. Expectations that an end to the longest ever US government shutdown continues to boost the oil demand, thereby supporting the price gains. Having said so, we have seen that on the supply side, the fallout in emerging from the US sanctions against Russia's two biggest oil producers, Lukoil and Rosneft, is further supporting oil prices. US natural gas meanwhile holds near $4.50 per MMBTU, the highest since December 2022, as traders bet on colder December and higher power demand. European demand is strong as countries reduce the reliance on Russian gas. And last but not the least, white sugar. Not just white sugar, even we have seen iced raw sugar prices holding steady near 5-year lows as investors weighed improved output signals in Brazil against relief over the expected imminent end of US government shutdown. We saw white sugar prices settling below $408 a ton, and sugar output in Brazil's CS region is expected to increase by nearly 7.8% in the second half of the October, according to an industry survey.